All right. This video is going to help you to complete the project. This is going to be you acting as an accountant and doing pretty much exactly what an accountant would do for a company that's starting out. This company is Landscaping Services LLC, so it's a limited liability company. That way, the assets are protected, the personal assets are protected. And this is the first month of operation. So as we go through this, I want you to think about um, this business. So, if you're going to be a landscaping business, what are you going to do? Well, they're going to cut grass and they're going to fertilize and they're going to provide uh, services to provide mulch, things like that. So, if you're going to provide those kind of services, what do you need? So, as we go through here, we're going to first invest in the business, and then we're going to buy things. We're going to buy things that we need, like a lawnmower, a weed uh, whacker, a trailer to haul the equipment around in. We're going to buy supplies. We're going to buy fertilizer. We're going to buy office supplies, things that we're going to need. So this is a real life example of what an accountant would go through to prepare the first month's financial statements. And we're going to divide this into two sections. The first is going to be just regular journal entries that we would make if we were a corporation, if we were Walmart. A lot of these entries are going to be automatic because of the computer systems and the scanners. But then after all that's done, we have to do those adjusting entries. So we have to look at all the deferrals and accruals, and then we have to make those entries to make sure that we have posted all the revenue that we have earned and that we've posted all the expenses, and we also have to run depreciation. So I'm going to tell you exactly what to do, but accounting is in the details, and it's following the directions. Most accountants, they have a process at the end of the month, and they may even have a spreadsheet that they use and that they will update based on new numbers. But you have to go through this process and go through these steps. If you do what I suggest, then you should not have a problem. Now you can see that we have four tabs here. And this really is this is an automatic system. So it's going to update the trial balance. This is the trial balance, okay? And as you see, the assets are listed first. The expenses are listed next. Or I'm sorry, the liabilities are listed next. Uh, Shareholder equity is listed next, then revenue, and then your expenses. And so when you do a trial balance in the old days, you would work up. And so you would prepare the income statement from this section here. You're going to have revenue and then expenses. And then that is going to be your income statement. All right. Over here, your income statement. And then we're going to declare dividends. So that is going to be your statement of retained earnings. And then this figure is going to feed over to your balance sheet here, retained earnings. Now this is our first month, so we don't have any beginning retained earnings. But all you're really going to do is you're going to post journal entries effectively. And you do that by going each line and then going to the ledger page and following the instructions. So we'll go to the first one. All right. 1/1/2024. So we're going to have a date. And what did we do? We've invested $50,000 in the business. Okay. So as you see, this ledger is set up as the uh, balance sheet and also the accounting equation. So we're going to have assets, liabilities, and owner's equity. Of course, owner's equity includes retained earnings. And retained earnings are going to consist of all the expenses here and the revenue, and then that's going to roll up. But all of these are going to feed onto these trial balance and financial statements. So you're just going to go step by step through this, and I'll tell you exactly what to do. So we invested 50,000 in the business. So what are we going to do? We're going to basically debit cash because it's an asset and increased by 50,000. And so then we've got to credit something, and we are issuing common stock for this investment. So we're going to credit common stock. So let's go ahead and start this. I would suggest that you just copy this, and then first it says to debit cash. Cash is in the asset section, so we're going to debit cash for $50,000. So debits are always on the left, credits are always on the right. All right, and then the other thing we're going to do is, well, I used the wrong thing here. Okay, I meant to hit copy, and what I hit was cut. So copy, paste, and then we're going to debit cash $50,000. All right, and then what is the other side? Well, we're going to credit common stock for the same amount, so we copy this again, go over common stock under owner's equity, and then I'm going to credit that $50,000. And you'll see it'll total here, and it'll total there. And now we go to the trial balance. Well, we assets or credits equal to debits. All right. And so this is exactly what would happen with an accounting system after you posted these entries. And what normally happens in something like this is an Excel spreadsheet. I list all the entries. I upload the entries into the computer system. Someone approves the entries. And then there's another step of that has to be posted. So that's just a final step. But until it's posted, it's not going to go into here. So once we enter this, we are basically posting it. And then that is going to feed the appropriate sheet. So here we're 50,000 in cash, 50,000 in common stock. Now you'll notice that there are some red numbers here. And those red numbers are to give you an idea of whether you are on the right track. So after you've completed all of this, your cash figure should be a debit of 42,400. And each of one of these, so debits have to equal credits, and your total debits and your total credits should each equal 61,554.17. And then you have your financial statements. Your net income should be 4,995.83, and your total assets should be 55,345.83. All right, but this was what would happen if you were to enter transactions into the computer system. It's going to update the trial balance, okay? And a trial balance is just a list of all accounts that have activity with their balance. And again, it lists in this order, and normally you would have an accounting system where you would have numbers and all of the assets would be start with a 1, so cash might be 1000, and payables or all your liabilities would start with 2, and your common stock and dividends would be 3, revenue 4, and expenses 5. And so that makes it easy to do the trial or to create financial statements. Again, you're working up. All right, so let's go to the second one. Okay, so we bought $3,500 of furniture for business. So we have an office, we have to furnish an office. So the first thing we're going to do is we're going to debit an asset, furniture. So we're going to find the furniture account down here. And we're going to move over and we're going to copy that. And then we're going to debit 3,500. All right, so we bought furniture and we paid cash. So we're going to credit cash for that amount. So let's copy this. And now let's go up to cash, which of course is under the asset side. And so we're going to credit. So, it's just like you would do. If you had $50,000 in the bank, you bought $3,500 furniture for cash, your cash account would go down to 46,500. We look at the trial balance. We're good both ways. And you see here, all we did in this example was we traded one asset for another. We had 50,000 in cash and zero furniture. Now we've got 46,500 in cash and 3,500 in furniture. Still equals $50,000. Now, if I'm you, when I do a journal entry, I'm just going to go ahead and highlight this. It's a lot easier if you have two screens, and you can make a copy of this and have this on one screen, and then so that you can have the ledger and other stuff on the other screen. And every time you make the entry, I would just go ahead and highlight it so that you know you've made that entry. So we've made both of these transactions. All right. And then I would make sure after every single entry that you want to go and make sure these numbers are correct. So for instance, let's say I credited furniture instead of debiting it. I'm going to go to my trial balance and, oh, wow, I'm off. Okay. Now it won't show up as a credit here. The way that the assets are, it will only update on this side. Okay. So if you have a negative here, you're going to be out. Now you're out by 3,500. And so in some cases, if you do it incorrectly, you're going to be out by double that amount. But if you're out by 3,500, obviously you're going to go and say, well, look, hey, here's a 3,500, so I need to check this entry. And I was supposed to debit furniture 3,500. Because I've got a credit and a debit in there, it's not working right, so I've got to eliminate this. All right, and then I go, so that's good. And now I go and my balance sheet is correct. Assets are equal to 50,000. Total liabilities known as equity equal 50,000. Okay, I made a deposit for rent of $1,500. All right, so I'm going to right click. I'm going to copy. And what am I going to do? I'm going to debit deposits for this amount. So deposits are under assets. So I'm going to, and you can do this is just paste special value. And you could do that by going here. I have pulled these up. I use this a lot, so I have put this in my title bar here because then I have to click on it. All right, so I'm going to debit that $1,500. All right, and what am I going to credit? I'm going to credit cash because I pulled cash out for $1,500. So I'm going to go up to cash and I'm going to copy that, paste special, and $1,500. Okay, so now my cash balance is 4,500, which you would expect. You have 50,000, you basically pulled 5,000. Check your trial balance, 50 and 50. Now, this, as you saw last time when I missed something, this will show up if these don't match. So that's another indication. And so now we go and we've got cash of 45,000, deposits of 1,500, furniture net of 3,500. So now I'm going to highlight those because I'm done. And if you get to a point where, well, I'm just put these in and then I'll check and you're off. You go again, you look for that number or you look for half of that number. Let's see if I can. She bought landscaping supplies on account. So on account means you didn't pay cash. So that means probably an accounts payable, a liability. All right, so bought $1,000 of landscaping supplies on account. So we're going to debit landscaping supplies, which is on the asset side. Landscaping supplies, so I'm going to enter that, and $1,500, or I'm sorry, $1,000. And what is the other side of this? I'm going to credit accounts payable, and that's in the liability section. And that's going to be a credit of $1,000. All right. And you can also, if you get into trouble, just make sure these amounts are correct. Trial balance is good. Assets equal 51,000. Liabilities and owner's equity 51,000. So we're good to go. So now I'm going to click this because that entry has done. Let's go down and say paid employee 1 week wages. Employee earns $120 per day. Employee started on 1/4/2024. A week's pay is 5 days. Okay. So if we paid employee 1 week, then they make $120 a day, and we're going to pay them $600. All right. 120 times 5 is 600. So paid employee 1 week's wages. So that's going to be an expense. It's salaries. It's in the equity because it's going to affect retained earnings. All right. So we're going to debit salaries in the equity section. So we look under the owner's equity section and we look for salary expense. There it is. Okay. And with Excel, you can either start a formula with a plus sign or an equal sign, but it's 120 times 5. So that's salary expense. And we paid, okay, so that indicates that we paid cash. So we're going to credit cash. Cash is an asset. So we go up to cash and we credit that. And so that's, again, 5 times 120 is equal to 600. So let's go check our trial balance. It equals. And so now we're starting, we got some expense. We got salary expense of $600 and our cash balance decreased, but assets equals 50,400. Liabilities and owner's equity equal 50,400. And so you're going to continue to do that. I'm going to go ahead and highlight this just because I have done it. And you're going to go through here and you're going to post that. And so the month ends. So now you've got to go back and look at your balance sheet accounts to go, all right, what do I have? What do I have to do for deferrals and accruals? All right, so the first one is going to be an accrual because we have a utility expense. We haven't been billed for that expense, but we're estimating that we owe utilities of $150. And we'll eventually get the bill and then we'll pay it. So we're estimating for the month of January that we have expense of $150. So that's going to be an expense, utility expense. That's going to affect retained earnings. So it's going to be in the equity section. So we're going to have to copy this. We're going to debit utility expense in the equity section. So let's look at utility expense. And we're going to debit that, and that's 150. All right, now what's the credit side? Well, the credit is that it's an accrued expense, okay? We don't have a bill, but we need to account for it, so we're going to credit accrued expenses under liability for $150. So let's go to the liability section, accrued expenses. We put in the formula, 150, and boom. So now we check the trial balance, okay? We check the income statement. All right, so right now we didn't post any revenue. We'll go ahead and do one of those just to make it look better. But we've got utility expense of 150, salary expenses. So as you're posting these journal entries, and what would happen in real life is that they would then update the accounting system, which is the trial balance, and then you would say, I want to print an income statement. And so you would just go and say, print an income statement for this time period. Let's go ahead and book some revenue. Okay, received $1,500 for landscaping services for customer A. Receive, that means you got cash. So what are we going to do? We're going to debit cash under assets, okay? And so we received $1,500. And now what is the credit side? The credit side is going to be revenue. So we have earned this revenue. So we're now going to credit revenue. Revenue affects retained earnings. So we're going to look under the revenue section, and that's going to be a credit of $1,500. Now we check the trial balance. Trial balance, we're good to go. Look at the financial statements. We've got some revenue come in. We've got salary expense. We've got utility expenses, etc. All right, so we've done that one. We've done that one. All right, so there are two more things that I need to we need to kind of look at. All right. Actually, we didn't do this one, so let's be. Well, we did do that one. All right. We also did this one. See how easy it is to get confused? Okay, so office supply expense. We need to post the office supply, bought office supplies. Trade bought. Okay, so let's do this entry. We bought office supplies on account for $500. On account, which means again, we didn't pay cash, so we created a liability accounts payable. So the first thing we're going to do is debit office supplies for $500. So let's look at office supplies. And then we're going to credit accounts payable for that same amount, okay? So here is office supplies 500, and then we're going to credit accounts payable, all right, for 500. Check the trial balance. Trial balance is good. And look, here we have office supplies. So now at the end of the month, okay, so let's highlight this. We have $400 of office supplies on hand, and this is something that you have to be careful about. So we have to determine how much we've used. Well, the difference is going to be we we have to look at the ledger balance, and the ledger balance says that we have $500 of office supplies on account. But we only have $400. So this balance, we need to get that to 400. And the only way to do that is to credit the account to 400. So when it says you have 400 on it left, you need that balance to be 400. You're going to do the same thing with the landscaping supplies on hand. You have $600 in landscaping supplies, so you need this balance to be 600. And to do that, you're going to have to credit this. All right, so let's go $400 of office supplies on account. All right, so we are going to credit office supplies. We've used the office supplies. So the other side of this is going to be a debit. So we figured the credit side, but we have to debit office supply expense for that amount, which is $100. And so that's under the equity. again, office supply expense, and that is $100. And so really your landscaping supplies, we want that balance to be 600. So we're going to end up crediting 400 and then debiting landscape supplies for 400. So we have taken care of this entry. So the other entries you have to be concerned with are depreciation. And you look here, and monthly depreciation is determined by the cost years of useful life. So furniture's useful life is 5 years. So we have to post depreciation. So the debit is going to go to depreciation. Now we have different accounts, but we're only using one depreciation account. We'll use different accumulated depreciation account. So we're going to have to debit depreciation for the furniture. And depreciation, of course, is here, all right? And so we are going to do the monthly depreciation. We're depreciating this over 5 years, or months would be 60. And so we're going to determine that by the furniture is $3,500 divided by 5, divided by 12, and that's going to be the, oh, divided by 12, not 1. I thought that was off. Okay, so our depreciation expense is going to be 5833. Well, now the other side of this is going to have to be accumulated depreciation furniture. Okay, so let's go and put that same amount. You can either do a, so accumulated depreciation furniture is, I must have tied that somehow. Yeah, okay. So anyway, accumulated depreciation furniture. All right, so then we look at trial balance. Trial balance is good. We've got depreciation of 5833. We've got accumulated depreciation of 5833. So what that means is that our furniture net is going to be the difference. So you can see that 3,500 minus the 5833, and that gives us the balance. So total assets are 52,241.67. Total liabilities and owner's equity is 52,247, 241.67. And now we've got depreciation expense. And so you've got a couple other depreciation entries that you've got to do. The last entry here is just going to be that you owe your employee 1 week's pay. So again, 1 week's pay is going to be $600. Salaries are for an 8-hour day, a work week is 5 days. So you're going to have to accrue this expense. So you're going to debit salary expense for a week's pay, okay, and that's under the equity section, salary expense. And again, that's a week, so that's 120 times 5. And then you're going to debit accrued expenses because, again, you owe them. And so you're going to, let's wait. Okay, so we're going to copy there, ledger, accrued expenses, and that's going to be $600. Trial balance, debits equal credits. Financial statement, we've now got salary expense, and now we've got accrued expenses are 750. And so retained earnings right now is a negative 833, but that feeds into that. So, and then you'll have dividends, and that's posted. So if you just take your time and you go through and after every entry, check your ledger or check your trial balance to make sure these equal, and then look at your financial statements. But at the end of this, all of your balances should equal these amounts. And if they do, then you know you have it right. Good luck on the project.